I'm going to be gone next Monday and Tuesday. So the next video after today that's publicly available will be next Wednesday. I might make a video on management for members tomorrow. It's really just learning when there's an opposite breakout against you and how to exit when there's an opposite breakout against you. But I've been doing that recently. And this week there were three trades that, if I had just stuck with, you guys know how I trade by now. If you don't, just keep watching videos. I'm sure you'll figure it out. But there were three trades this week that should have been, or definitely would have been, large losses had I not exited when the opposite side got a breakout and getting out around break even. And my profit factor this week was a 4.25, which is it's way higher than I'm capable of, for sure. I'm not capable of maintaining a 4.25. It was just it happened to be a very, very, very good week. But I think that even with the occasional large loss, my profit factor can still be a 2. At my current on the month is I have a 1.5, but I took some larger losses earlier in the month and I looked back at them and I'm going to make slides on them. But, my larger losses are how many of them had opposite breakouts, occur against me. And I found that a lot of them had opposite breakouts occur against me. And, whenever I make this members video, I'll go over, I might make it after this, but I'm not really sure, but I'll go over, what I'm looking for in an opposite breakout. But a lot of it's just with Ali's white paper. It really shows you how to think about breakouts. And so I had a pretty decent day today. So we started off in a tight trading range, bars 1 through 10 or 11, you could say. Bar 12 is an outside bar, and outside bars should get tested. So I was expecting that even when we got these 3 bear bars, we should pull back. But one might need a second leg. You get it on 3. And that's the thing you have to think about is the larger your breakout. Every bar that's a breakout bar has essentially not the same probability of getting a symmetrical second leg. But if you looked at all of the breakout bars instead of just 3-bar micro channels, you probably get roughly the same probability of the market achieving a symmetrical second leg. I don't know if it got it here on 3. Got within a tick or 2. And that's pretty much exactly what you're looking for. So if you're going to sell something like 1 or 2, you have to have the expectation of what you're looking for. Selling the close of 1 and looking to get some sort of large swing doesn't make a whole ton of sense. A lot of the times you're going to open in a tight trading range. So it's really just not as good. 3-bar micro channel, 4, 5, 6. There should be buyers below for a small second leg up, which is what we got. You can see we rallied back to the close of 6. So the traders who bought the close and scaled into the 3-bar micro channel made money. Obviously, I didn't take this one. I took 3 trades today. So 12, 13, 14, 3 straight bear bars. I did sell the close of 13. I thought it was a strong trade. 14, not 13. I sold the close of 14. I thought it was a strong trade. And then when we got 15, we had a really large breakout bar on 15, and that's a pretty big surprise. So I sold more during 16 at a 25% pullback. 16 is one of those trades where there's nothing wrong with taking 16, but I just think that if you're doing that kind of stuff, you're going to get trapped in a cycle of taking, again, I'm not saying this is a bad swing trade. 16 is a good swing trade, but you get caught in a cycle of taking bad swing trades. It's probably better to look to trade always in and learn about get breakouts against you. Obviously, I'm biased towards that because that's how I trade. But I traded the way of taking these sorts of swing trades for many years, and it creates a lot of problems. And I think that, while you take this one and you go into the weekend feeling great about yourself, it just ultimately, 3 months down the line, it just leaves you more confused. So 16 is a lower probability trade. The good part about it is when the low probability thing works, this happens and you catch a bull trend. But a lot of the times it's not going to work. So I sold more. And then as 17 was rallying, I sold more. Once 17 closed, now I have to get out. 16 and 17 is an opposite breakout against me. 16 isn't really all that great without 17. If 17 looks the way 19 does, then you need to get out. You shouldn't be in that trade anymore. You want really good follow through because you're trading against a giant leg here. You're trading against this. This is a high probability of getting a second leg. Just go look at all the 3-bar micro channels. Most of them get second legs. So I sold more on 17 or during 17, and then high probability of a pullback 12 through 15 should get some sort of second leg. You guys, I've mentioned before, I use my 150% stop, but very high percentage chance that you're going to get at least one more bar in your direction when you use that kind of stop. So after 17, I expected that I would get a small pullback that I can get out around break even. And my 3 entries, I had sold here, I had sold more on the pullback here, and I had sold more on the pullback somewhere up here. And so my average cost was around the 16 high, which is the one of the breakout points. And so I ended up exiting there during 18 for break even. And this is one of those trades where if I had held it, it would have turned into a giant loss. And it's better, small losses never kill your account, especially if you're trading the way that I'm trading, where it's usually high probability. It's better to just take some smaller losses. My trade, in theory, it should work at 76, whatever percent of the time. And my current win rate, or even this week, my win rate was 60%, but I was winning a lot more than I was losing. As far as dollars per trade, I was winning a lot more than I was losing. So this is probably going to go higher. If you are going to take 16, you should trade small, and then you should add on the close of 17 because that's good follow through. Perfect follow through for the bulls if they bought 16 is another bar that looks exactly like 16. 17 is still good follow through, but it's not amazing. For me, if 17 had looked like 16, I would have probably just gotten out of the market and taken the small loss. You see we have 3 legs up, and then we get a breakout above 24, 25. The bears are trying to get a reversal down and keep the market in a trading range. So you can see we were in a trading range, and the bears, they're trying to sell the top and keep the market in a trading range, because if we're in a trading range, odds are we're going to test back down to this close, a very high probability. But if we're able to break out of the trading range, these bars are going to get a measured move. It could be either way. And you can see we got the measured move up. If you were watching, 63 hit it to the tick and then sold off pretty aggressively. Also, 57 through 59, another 3-bar micro channel, the measured move 57 to 59 was exactly where that measured move up was. And that was not a coincidence. So as I mentioned, I got out break even here. I did buy the close of 59. I got out for 1R. And the other trade I took, I bought the close of 33. So, we get a breakout above the trading range. I buy the close of 33. We get a pullback 37. 37 is big enough to get a second leg. So buying the close of 38, you're buying a high 1. It's not really a very good trade with a stop down here. That stop doesn't really make a lot of sense. If you're taking the trade, you need a wider stop, at least below 31. And so I bought here, and then once we got 38, I expected us to go 1 tick below 37. Since 38 is a strong close, I thought that odds were we would rally back to it, but we'd probably go below it first. So I bought more below 37 during 39. My initial scale in was somewhere down here, but I just moved it up because I wasn't convinced that we were going to get all the way down to this area. 40 was a strong enough bar that if it got one more follow through bar, I was willing to get out, but you can see bulls bought aggressively and that caused 41. We got a couple more legs up. 50 through 53 is, again, very likely to get at least some sort of second piece, which we do get on 56. And then obviously we rallied up to the measured move. Not really great. I have to run a study on it. I don't think they, 3-bar micro channels tend to perform very well after bar 60. You can see here, they get a lot of deep pullbacks, and, 66, not that good. 74 fails. So after bar 60, I start to get really cautious. I haven't done a test on it after bar 60, but I need to go check out the win rate of my signal after bar 60, because it really doesn't seem all that great. It seems to perform best, bars 7 through 59, which I'm sure there's plenty of signals in that range. So as far as the daily chart, you can see we're breaking out above. So consecutive bull bars. I keep saying I'm not sure we're going that much higher, but we've obviously had a really, really, really good rally. Really need to get rid of this open interest tool. I'll probably say that for another 6 weeks before I do it, but I really need to get rid of it. Really, a good rally. We've got a breakout. The bears tried to test the breakout point of this high, and we're unable, so far at least. So a bit of disappointing follow through for the bulls, the tail on the top, but nothing to sell. So no reason to go short on the daily chart. You're long or you're flat. The weekly chart, really good bull bar, but what do you see? Well, looks like 3 legs up to me. 1, pullback, 2, pullback, 3. And this looks like a climactic bar. Do we reverse next week? I don't know. I mean, even if we do, it's going to be minor. But if we get a pullback, I'm going to start buying it. I would like to see us get, I'm not convinced we're done with 5,000. It's just with how much time on the monthly chart we spent around, 2,000. We spent a year around 2,000 or more, like a year and a half. What about 3,000? 3,000, April of one year to June of the next year. So that's, 13, 14 months, 4,000, 20 months, 5,000. We went over it, touched it once, and then touched it again. We have touched it twice now, but I don't know. I'm not all that convinced that we're done with 5,000. All right, that's going to be it for this video.